Hello, everyone. Welcome back to the QX Financial YouTube channel. I'm Nathan Bigley, financial professional with QX Financial. If you end up enjoying this video, please like, comment, and share it with your network, and subscribe to the QX Financial YouTube channel so you can stay up to date with all of our new videos. Today, I am joined again by estate planning attorney Phil Shekerlian, and we will be diving into the details on some of the different business entity types. How are you doing today, Phil?
Great. Thank you for having me again.
Absolutely. It's been a lot of fun, and hopefully we can keep it going. I understand today we're going to talk a bit about kind of the different business types and what they mean, kind of into the details there.
Absolutely. Yeah. Let's get things started right off with the most common one, the corporation. Well, the most commonly known one, I should say. It's actually not the most common one out there. So a corporation is a valid entity. It has a different taxpayer ID number than an individual, and it's looked at as kind of like another individual in that sense. It's something that's formed with your state. It's not a federal business, it's a state business, but it does register with the IRS, obviously, so that it can pay taxes. And that's where that taxpayer identification number comes from, that's used to set up bank accounts and things like that. That's used for a corporation in place of a social security number. The filing fees, they vary from state to state, but they can be around $100 to several $100, just depending. The type of protection that a corporation offers is it will protect personal assets against the acts of other shareholders. It'll protect your personal assets against acts of board members. It'll protect your personal assets against acts of officers and employees of the corporation, and it'll protect your personal assets against contracts of the corporations. Remember, like I discussed in the last video, it doesn't protect against your personal wrongdoings.
Right.
And that's all for protection coming through the corporation. As far as protection coming from your personal side to the corporation, your corporation is not protected from personal lawsuits. So if you were in a car accident and you were sued, those shares of stock you own in the corporation are something that the person suing you could take from you. While we're talking about shares, let's talk about the structure of corporations. The owners of a corporation are called shareholders. You guys are all familiar with, you can go on a stock exchange, the New York Stock Exchange, for instance, and buy shares of stock in many, many companies. And when you buy those shares of stock, you don't have any say in how the business is run. All you are is an owner in that business. Everybody that owns shares, that is the group of owners of that business. No one else is owners and no less. Now, just because you're an owner, like I said, doesn't mean you have control and voting rights. Some shareholders may have that, some shareholders may not. It all just depends on the type of shares that you purchase. The shareholders that do have voting rights, they can't say how the business is run. That's not a shareholder's responsibility. What they can vote on is who the board of directors are for that corporation. And the board of directors are the individuals that determine dividend payments, executive compensation, and who the officers are going to be. And the officers are the ones who run the company. They're the face of the company, the ones that you see in the public, like the CEO, the vice president, the COO, the CIO, CFO, secretary, all of those positions. Those are the ones that run the company, but they get elected by the board of directors, and the board of directors get elected by the shareholders. None of their jobs cross paths. Each one has its own duty in the company.
Very cool. And just so everyone at home is aware, you can't go on Robinhood right now and buy 10 shares of Google and start voting at the board meetings. Okay. Just let's be clear about that.
Absolutely. A lot of corporations and even other types of businesses set up different classes of ownership, where some of the class has the voting rights and some of it just has strict ownership rights, and that's it.
Very cool.
So here in California, a corporation has to file an update with the state every single year. It has to have annual meetings of the shareholders, which has to be done after only the appropriate required notice. And it has to have an annual meeting of the directors, which again is only after the appropriate notice is given. And then any major decisions or changes to the company need to have resolutions by the shareholders, directors, or both. You really have to have a lot of formalities to do things. And if you don't have those meetings documented, actually held and documented, then your corporate veil can be pierced. A corporation has no limit on hiring employees. For taxation wise, a lot of people hear C Corp and S Corp as far as taxes go for a business. Well, those are more of a term. that can be applied to many different types of businesses. And really what it is an S Corp, as it's known, is actually an S election. It's under subchapter S of the IRS code. And what that subchapter S says is that taxes that go to the corporation actually pass through to the owners. So for instance, if my company were to make, say, $1 million, and let's say I own 60% and Nathan, you own 40%. Okay. That $1 million would not get reported on the corporate tax return. Well, it would get reported on the corporate tax return, but it would not be paid. There would be no taxes owed on the corporate tax return. Instead, the corporate tax return would funnel that income to mine and your personal income tax returns.
I see.
So 600,000 would go to my 1040 that I file at the end of the year, and 400,000 would go to your 1040 at the end of the year.
I see.
And so that's called pass-through taxation. The other one, which is known as a C Corp, is actually an election under subchapter C, and that's essentially also known as double taxation. Back to the same scenario, if the business makes $1 million profit, then the business pays taxes on $1 million profit at the corporate level. Then if I decide to pay myself a salary and pay you a salary, then whatever salary you make, you pay on your own personal taxes, and whatever salary I make, I pay on my own personal taxes. So let's say we each make $100,000 a year. That means that taxes are going to be paid on $1 million at the corporation level. And then each of us will pay taxes on $100,000 on our personal. So that $200,000 that went out to the two of us was actually taxed once at the corporate level and once on our personal income tax return, hence why it's called double taxation.
Right. And I'm sitting here, and I'm sure we'll get into it, trying to think as to why you would want to do that. But
that's exactly what I was about to say. So people would wonder, well, why would I ever want to do that? Well, currently at the moment, we don't know what's going to happen with the new political environment. Currently, the corporate tax rate is 20%. That is significantly lower than most individuals' high net worth income tax rates.
Right.
The majority of business owners are more in a 25 to 40% tax bracket federally. We're only talking about federal here. We're not even talking about state taxes. That's a whole different story.
Right.
And so would you rather pay taxes at 20% or 40%, if you're in the 40% tax brackets? Well, what you can do is you can take that $1 million, and like I said, you keep 800,000 of it in the corporation. That's only paying taxes at 20% rate.
Right.
And that 200,000 was paid out to me and you now pays at 20 plus 40%. So it's 60%, but you're still paying significantly less taxes than if all of it went at the 40% rate.
Right.
Pass through.
Interesting.
And so those are the two options that a corporation can have. They can have a subchapter C or a subchapter S election.
Okay.
And then another feature of a corporation is that they can be publicly traded. The next type of business entity that's common to set up is a LLC. And I actually probably set up more LLCs than any other business entity.
I was just about to say, this is probably the most common type, at least that you would see, right?
Absolutely. There's a lot of benefits. They offer a lot of protection and flexibility, and we'll go through all that right now. So to register and form a LLC, it's just like a corporation.
Remind the audience for me real quick what LLC stands for.
Oh yeah. LLC is a limited liability company.
Okay, so there you go. It's right in the name, limited liability.
Absolutely. Yeah, just like a corporation, it's registered with the state and then registers with the IRS for taxpayer purposes. Filing fees are about the same, sometimes a little bit less, like $70 to a couple $100, but it varies state to state. One of the downsides to LLCs is that some states prohibit the use of an LLC for certain types of businesses. For instance, me as an attorney, I cannot use an LLC. Here in the state of California, if you're listening, Governor Newsom, please change that, because it's really a disservice to all of our people out there that are offering specialized services to individuals. So like lawyers, doctors, engineers, architects, CPAs, a lot of them are prohibited from using an LLC. So we have to use a corporation.
I wonder why.
Yeah. LLCs are still not fully understood by a lot of governments. They just haven't taken the time to learn about them and to change the laws.
I imagine the name itself, it gives maybe governments the impression that the business owner is trying to, in some way, not take responsibility or maybe act a little bit recklessly, when really it's not that way.
It's possible. I'm not sure. I cannot put myself into their shoes.
Right.
So as far as protection goes, it's the same as a corporation in some ways. It protects against the act of the other members, the other managers, against contracts, same as a corporation. And it does not protect your personal wrongdoings again, but it does offer one benefit that a corporation doesn't. With a corporation, if you were to be in a car accident and be sued personally, they can take the shares of that corporation that you own as an asset. There are no shares in a LLC, therefore they cannot take the LLC from you in a lawsuit. The only thing they can do is get what's called a charging order. And what a charging order is kind of like a garnishment of your wages. So if I own an LLC and I make $1 million and I have somebody that sued me for a car accident that had a judgment against me for $1 million, as long as I leave that $1 million in the LLC, they can never touch a penny of it. But if I were to pay that money out to myself, pay myself $100,000 a year, they could garnish my wages out of there. Now, I could come back with saying, well, $100,000 a year, which here in Orange County is actually true, is barely enough to get by on. Therefore, you should only get a very small portion of that. Otherwise, I'm not going to be able to afford to live. And so you can play the game like that. But if I don't distribute any to myself and instead I distribute to my sister or my parents or whatever, and or a special needs trust or something like that, then the creditor can never get to that money.
Yeah, no, I was just thinking the special needs trust might be a good one from one of our previous episodes, like you mentioned. So
Absolutely. So that's one benefit that an LLC allows that a corporation doesn't. Structure is also completely different. The owners of a corporation are called shareholders. The owners of a LLC are called members. Once again, you can have multiple classes of members. Some have voting rights, some don't have voting rights. It just depends on how you set up that LLC. There is no equivalent in an LLC to the board of directors. That level is completely skipped.
right.
But then you do have a equivalent of the officers, and in an LLC, they're called managers. So this would be like your CEO and things like that. Now, they don't have to have a title of CEO or treasurer or CIO, anything like that, but you can give them those designations as well, but they're also classified as managers.
I see. So maybe finance manager, things like that.
Absolutely. And they're the ones that run the company on a day-to-day basis.
Okay.
With a corporation, the requirements were that you had to file with the state annually, whether there were changes or not. With an LLC, you only have to file biannually. So half as much responsibility there.
Right.
With a corporation, you have to have all of those meetings, the board member meetings, the shareholder meetings, resolutions, things like that. And you don't need those with an LLC. It may be best to have meetings for major resolutions, but it's not required either.
Okay.
Once again, there's no limit on hiring employees in an LLC, and they can elect a subchapter S, a subchapter C, but an LLC can also elect other tax elections that a corporation can't. They could be a partnership, which is all the income flows through, but a different type of return is done and there's no requirement for salary. They could be elected as either a sole member or a disregarded entity, which means that all the income flows through to one person or one couple, and there's maybe tax benefits to those as well.
Right.
We'll get into the sole member a little more, but the partnership. So with the subchapter S and C, there has to be mostly with the S, but there has to be a reasonable salary paid to the owners. So let's go back to that scenario. We make $1 million.
Yeah.
Me and you own it. I own it 40%. You own it 60%.
Yeah, we can go back to that scenario whenever. I like that idea.
Well, I think I switched that, but that's fine as well. Let's say we put in the same amount of work. Okay. We put in the same amount of effort. We contribute to everything equally. And we also work full time. Well, let's say our business is a financial advisement firm. Okay. What does a typical financial advisor make as part of their salary? That's where you want to start for what is a reasonable salary. So let's say that number is $80,000 a year. Well, we're making quite a bit of money, right? So if we're making quite a bit of money, what would a financial advisor making that much money be paid? And what would one that's actually working full time be paid? Let's say we're actually just working 30 hours a week. We could actually reduce that reasonable salary by saying, well, we're only working half the amount of time. And so you take a whole bunch of factors into account to determine what a reasonable salary would be. And then that's what has to be paid out as a salary.
I see, as a minimum.
Those could be dividends or held in the business or whatever the case may be. When you start electing partnership or sole member or disregarded entity, you don't have to pay a reasonable salary. So that can be an advantage to use some of those tax elections.
Okay, so it sort of depends on the company's revenues, the company's structure.
Absolutely. Every situation is unique. And you also want to consider the other income for the owners, because you have to calculate things like personal tax bracket, self-employment income, things along those lines.
Interesting. So if you're out there and you're looking to start an LLC, you're definitely going to want to talk to an attorney who can really walk you through this stuff, because there's so many different facets that go into this, and there's a lot of different ways you can go about it. So.
And actually, I would go one step further and say, if you're looking at starting a corporation, definitely talk to an attorney first, because you probably are better off with an LLC.
Right. And that's kind of where I'm getting from what you're telling us here too, is that an LLC seems a lot less, I don't know if intensive is the word, but it seems
is.
a lot
It
more
is.
easier for somebody to start it up.
Absolutely. Less work and keeping
Yeah.
it going. But the big downside about LLCs, which is why you may want to start a corporation, is you can't publicly trade them.
Right.
So if you ever want to trade your stock on the stock market, then you're going to need a corporation.
And I imagine often somebody might start with an LLC, sole proprietorship, and if they get big enough to the point where they want to have an IPO, they can change
Absolutely.
it.
Or they can set up a parent company that offers the IPO, or a whole bunch of different ways.
Right. Very cool.
All right. We'll go ahead and wrap it up here. I think next video, we'll talk about the other types of business entities.
Awesome. You guys heard them. Very cool. Well, please remember to like and comment and share this video with your friends and family if you got something out of it. The next video, like Phil told us, will be on some other types of businesses. It's going to be really exciting. Again, I'm Nathan with QX Financial. We're going to put Phil's information at the bottom of this video so you can send him an email or give him a phone call. He's doing free consultations for all of the QX Financial YouTube viewers. Take care, Phil.
Thank you.
The commentary provided in this video is for informational and educational purposes only. No advice, offer, or solicitation of any kind, expressed or implied, is being given. The views and opinions expressed do not necessarily represent the views and opinions of QX Financial, any subsidiaries, or associates thereof. When considering making any changes to your situation, you should consult a competent licensed professional. All rights reserved. Copyright September 17th, 2020.
This information is not intended and should not be taken as legal advice for any particular set of facts or circumstances. You should contact an attorney directly for advice with specific legal problems. None of this information creates an attorney-client relationship with the law offices of Phil Shekerlian.